Okay, good. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I was giving between 8 and 10:50 GMT today, tracking live the Forex market together part 1. And I explained to you how my trading system works following the derived forecast, market reading, and also the trading strategy. So for that, the forecast we have to look into. Now the forecast says today, during that of the European session, swing and slide was expected in the case of Euro and GBP, and subsequently swing and rise is expected during that of the US session. We are into that of the US session, 13:30 GMT, the US session starts, and we are by 14:01 GMT. And here you find the market is making the swings. So first of all, to find out by using the market reading technique where they are making the swing, whether the swing near that of the high or above that of the high or near that of the low or below that of the low is very important. For that, we noted down the initial lows and the highs, and here I noted down by 3:30 GMT. And those levels are now being compared with that of the market to find out where they are heading. Now, in the case of Euro, the low was not breached, but the high was breached, and 1.1373 they are breached and staying above that of the high from the start of the US session, 13:30 GMT up to 14 GMT. So they just breached the high and holding above, and they are expected to consolidate above that of the high for another 5-10 minutes and start gaining the levels. In the case of GBP, the initial high was 45.59. The low they just breached and came down. They made the extended downward move and then subsequently went up and breached the high also and went up to the of 1.4582 and then came down to 1.4532 and start gaining the levels. So here you come across, now they are trading around that of 1.4559 and slightly breached it. So this time we should take the buy, and they are trying to pretend as if it is going to drop, but they wanted to gain more levels similar to that of Euro. And in the case of Yen, 106.472 is the low. They have come closer to that low, but still not breached the low. So we have to watch how far they are going to stay near that of the low. If it is a false move up to that of the low without breaching the low, then they will gain the level after gaining the levels in the case of Euro and GBP. Then CHF, they are making a nominal consolidation, and then subsequently they breached the low and came below in tandem with it of the Euro rise. And in the case of Yen, they breached the low, stayed below there during the European session, and as I explained, they came closer to the 1.2650 area, then gone up, and now they are holding around 1.2671 level. In the case of Australian dollar, 76.60 is the low, and they are just breached the high, and they breached the high and staying above the low. They are not breached it. So everywhere you come across that they breached the high in the case of numerator, breached the low in the case of denominator in most of the currencies. So what trade we will think of? So I'll first give the trades. So we'll keep 10 pips below that of the market. So the buy limit order, okay, 10 pips below, I'm keeping the buy limit order. The exit will be 30 pips above that of the buy. And the hedge order, $1.1360. The case of GBP, as I explained, they're holding near that of the initial high. So we'll buy it straight market, 1.4557. and exit. So, okay. And in the case of N, they breached the low and they have formed the new low. We have to watch whether the new low is breached. Anyhow, we'll try to take a buy position in the case of USDN, and most likely it is only a brief downward stop and to make further rise. $106.70 buy market, and the exit is 107. Just we initially aim for 30 pips. Okay. So these are all the orders I have placed. In the case of GBP, I had taken at the market, and in the case of Euro, I just kept a buy limit order 10 pips below the current level, and in the case of USDN, I had taken the market. Now let us see what happened to that of the trade I had taken it during that of the European session. Okay. During the European session, I took a sell position at 1.4546. I was explaining to you that I had taken a long time in explaining the market up to that of 9:30 GMT. Already the market made a brief upward stop and then come down. And so I kept only at the prevailing market rate 10 pips above a sell limit order, because the forecast was telling that it will make a swing and slide move, and then kept near that of the low a buy limit order, and I kept the hedge order 30 pips above that. And subsequently what happened, it was showing profit during the discussion, and suddenly around 12 GMT they made an upward stop and went up to 45.82, and then it was hedged, and then the hedging was not making profit for 10 minutes. Then immediately I closed it with 2 pips loss and kept another hedge order 30 pips above 1.4606 and waited. Then it started coming down very quickly, but after coming to that 1.4546, it was showing only 1 pip, 2 pip profit. And so it was not trying to reach the low what it has set. So immediately I closed around 1.4537 with 9 pip profit and close the sell position, because I know that during that of the US session they are going to make the swing and rise, and against the trend I had taken this sell position just to capture a small profit, and instead when they are making a downward stop, and during that of the start of the European session, if you had taken a buy position, you would have closed it during the early session itself. Otherwise, the best thing is when they are expected to make a rise during Japanese session, slide during European session, and gain during that of the US session, the best thing is wait for the dip and then take the buy position, because the overall trend in the market is upward. So this is how we have to take the appropriate trading decision, and when the decision goes wrong, we should be in a position to close the position, accept the loss and close the position, or modify the exit order and close the position with a nominal profit, because when they're making a downward move, at that time euro was near that of the high and they started breaching the high, indicated very clearly they are not going to drop GBP in a big way to capture the profit near that of the low. So that is how the quick decision was made in order to close the position with a nominal profit. And then I had taken now the buy position near that of the initial high in the case of GBP, and I kept 10 pips below that of the current market level, but we have to see how far they will dip GBP euro. Now, in the market reading, I was explaining that we will review during the US session the high, low, and the net changes. Now, during that of the European session, I was showing you how they have been making the contrarian move by referring to that of the net changes. In the case of euro, it was showing 10 pip positive net change at that time. GBP was showing negative net change and subsequently went up to positive net change when they made for the data release an upward stop and start making the slide. And again, they are just holding with a positive net change. Australian dollar was also showing negative net change, and now it is showing positive net change. So the numerators are showing the positive net change. The denominators are showing the negative net change. So overall, we come across the USD weakening move in all currencies. When you come across like this for the first 30 minutes from the start of the session, we can understand till end of the session, they are expected to make only the USD weakening move slowly because it is an intentional move. So if it is an extended move, then they will quickly, if it is an extended move, they will quickly make a rise and hold and dip and things like that. But if it is an intentional move, overall they will be showing the USD weakening move in all currencies. But in the case of the denominator currencies, they are not making proportionate drop when compared to that of the numerator currencies. So to start with, they are making the USD weakening move and gain the levels in the case of Euro, GBP and Australian dollar. And later on from mid-session, they are expected to gain the levels in the case of the denominator currencies, especially USD yen, and to certain extent CHF they may rise. And in the case of Canadian dollar also, they made the downward move during the European session, but now they are not doing it. Slowly they will gain the levels in the case of USD yen as well as USD CAD during this US session. So this is what we need to understand. They make the contrarian move, then from there they made the USD weakening move, and again they will bring in the contrarian move during the mid session. So you have to understand how they make different type of moves in the market in order to hit the stops and also try to make the moves according to their intentions. So we need to read the intentions only when they are making the intentional move. The intentional move is now on the upside. The extended move will be quick downward move to give a confusion to the traders, so that the traders will get really confused when they see that GBP has already dipped from the high and Euro is not dipping. Immediately what the traders will think is, we'll go for a sell position in the case of Euro. This is how they relate Euro and GBP. But the players have got a different tactics of trapping the traders. So they pretend as if Euro is going to rise, GBP is going to drop. Then since people have left the chance of selling GBP, they will go to Euro and take a sell position, thinking that 1.14 is a strong resistance and probably from there Euro might make some corrections. But the players are holding from 13:30 to 14 GMT, they are unlikely to correct, because once they breach the initial high and stay above there for more than 30 minutes, then they are expected to continue to gain the level, breach the new high every 30 minutes as an intentional move. And you would have noticed, those who have been watching from 13:30, you have noticed that every time they are just breaching the high by 1 pip, 2 pip like that. And that shows the intention is to gain the levels. So when you see that USD gaining move in all currencies, you can keep 5-10 pips below that of the market. A buy limit order, keep the hedge order 30 pips below to limit the risk. And once it is filled, we can watch carefully, and once the position makes profit, we can keep stop at entry and try to maximize the profit that way. So here you find that identifying the market trend with the help of the forecast and the market reading are vital. And after that, the trading strategy is very, very important. That is, once the position is hedged, we have to watch for 10 to 30 minutes and find out how exactly we can handle the position. We should not become upset once the position is hedged. And many people, when the hedging facility is available in the trading platform, they assume it is something like a stop. So they keep about 70 pips away from the other market, the hedge order, or 100 pips away from the other market, the hedge order. And once it is hedged, then immediately they ask people what to do with it of the hedge. There is no need to keep quite a wide hedge, because once you keep the hedge order, if it is filled, we can always watch for 10 to 30 minutes and find out whether the hedging is making profit or not. The hedging is not making profit, we can simply close the hedging with 1 or 2 pips loss, or with stop at entry, keep another hedge order to limit the risk, and then once the position start making profit, we can keep stop at entry and continue to gain from that of the position. So once the position is hedged, this is the way we have to handle it. If the position is hedged and the hedging is making profit, then we have to find out whether we can do either way trade. That is, book profit on the sell side and book profit on the buy side, because the market means up and down moves. And if they make an upward move, then in the case of Euro and GBP, they will bring necessarily volatility. And in that process, we can take profit. Suppose you have taken a sell position in Euro. Imagine that I had taken a sell position in Euro without knowing the forecast or the market trend, because it is near the high. Then subsequently the market goes up. I am hedged. The hedging is making profit. Then 1.1430, the hedging is making profit. I will just watch for 30 minutes. The hedging is continuously making profit. I keep stop at entry in the hedge and wait for the market to go anywhere they want. And finally, when they come down, I can book profit. So what is the trading strategy I am going to use in that case? Then, since it is a breakout trade, they breached the initial high and staying above there for more than 30 minutes. So I can either close the sell position with a loss and maximize the profit on the buy side, or I can wait for the rise to happen. Once they make a net change of 150 pips, by end of the day, I know that they are expected to make an upward stop and then start making an extended move on the downside. So I'll take another sell position. So averaging you can do every 150 pips, because they have got a weekly limitation. They cannot rise more than 350 pips in a week. So if you take one more sell after 150 pips rise, another sell after 150 pips rise, you will find all the position will be able to close it with net profit within the week or the early part of the next week, when they make the week beginning false move. This is possible in the case of Euro and GBP, because they make either way moves in the case of these two currencies where the volume is relatively high. But in the case of the denominator currencies, sometimes for a prolonged period, they may do the one-sided move. We have to doubly cautious while taking the position. Still, we can take a buy position near that of the low and book profit near that of the high. That sort of trades, we can do it in the case of the denominator currencies. Now we can follow how in the case of Canadian dollar, as I told you, during the European session, they made that drop, and when Canada is active, they are just weakening it, weakening the Canadian dollar, slowly gaining the levels. So they will slowly bring in the contrarian move in the market. Euro and GBP, they will gain, but in the case of other currencies, like the denominator currencies like USD CAD and USD yen, they are expected to slowly gain the level, and the Swiss franc, they will be holding, when Euro is holding at the higher level. So once the position is hedged, we can think of doing either way trade, or we can add another position after a spread of 150 pips and then close both the sell position below the net profit level. So if we develop the trading strategy, understand the possibility of trading using the hedging, then you come across innumerable proposition, and thereby you will be able to continuously trade without any stress. Because at any time, the open position will have only 30 pips loss making position if it is hedged. Otherwise, if the position makes profit, we'll keep stop at entry and remove the hedge order. Now, currently, our position, if you review, I kept the buy limit order, which is still not being filled, and the GBP I bought into the market, and which is making a slow profit, and USDN I bought it around this level, which is maintained. So we will wait for some more time and see how exactly it is being filled, and then subsequently, because in order to handle the crosses, they will make small swings in the case of euro. At the time, we can take a buy, but definitely they are going to gain more levels in the case of euro. So watch that and then understand how by reading or identify the type of moves they are making in the market, you will be able to make a decisive trading. If you have got any question regarding this forecast, market reading, and also the trading strategy, you can ask me. I'll explain it because I wanted to spend more time in answering to that of the questions if it is asked, so that I'll be able to understand how far the listeners have understood my methodology of trading, so that I can take it up to the next level. Now, these are all the market timings. So you have to be very, very careful with regard to the market timings. Normally, you come across the conventional market timings like the Japanese session, Asian session, and also the European session, London session, New York session, then Pacific sessions, etc. They are all being explained to you, and all the people are encouraged to follow their local time to trade, so that you will not be able to understand the 24 hours market. But actually, if you use the GMT time, then you will be able to understand it is a continuous process in the market. The same live market code page can be used till end of the US session. And tomorrow, if you look into that other live market code page, you'll find the variation with regard to the levels and also the net changes. Exactly by 2030 GMT, the US session will get over. Then afterwards, after about 30 minutes, these high and the low will be set. You can just watch how exactly they are handling the market during that of the gap time. If you happen to, or if you have got a facility to watch the market during that of the gap times, especially after that of the US session, so that how they make their day changes, and with regard to the market, we'll be able to really understand. Now, these are all the session timings derived based on the moves the players are making it. And also, they have the method of following these timings. And the early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. So if you identify these times and trade accordingly, take a position during the early session. Now in the US session, 13:30 to 15 GMT is the early session. Now we are around 14:30 GMT. And if you carefully watch and try to take the position before 15:30 GMT, and you can book profit by 19 to 20:30 GMT, and definite profit will be seen. And during the mid session, they will be making alternative move or the contrarian move. You need not worry about it. Still, you can keep the hedge order to limit the risk in the market. And also, you have to keep in mind only two pairs they handle at a given time. I was explaining this during the European session, how they have been handling GBP as well as the Canadian dollar. And now, if you watch carefully, they are handling euro by breaching the initial high and staying above there. And it is making small swing in the case of GBP, and in the case of yen, they breached the low and holding there and started gaining the levels. And this is how they make the downward stop, and after setting the initial low, by about 9 pips and then start gaining the levels. So we have to understand why they are making it. Normally people have got that intention. When euro is gaining, automatically USD will be dropping, so we'll take a sell position for 20-30 pips profit. It may end up as a wrong trade, because if you try to correlate the currencies, for some time it appear as if they are correlated when they are making US dollar weakening or US dollar gaining move, and subsequently when they make the contrarian move, you'll find that we are lost. So now, even now, you can see that in the case of euro, they are just making the high level consolidation, but in the case of GBP, they are making small dips around that of the initial high 1.455759 level. They are making small swings to confuse the traders, so that, and also to gain more levels. In the case of euro GBP, they are holding low GBP and gaining euro. So this way they handle the crosses, even though you find all the net changes indicate the US dollar weakening move. Identifying the type of moves is the most vital thing in market reading, and it always happens in sequence. So they make the extended move to start with. Sorry, they, during the start of the day, they start with the stop and upward or the downward stop and sometimes they make extended downward or extended upward stop and depends upon the consolidation level, whether they are making the middle level consolidation to make either way stop ins or lower level consolidation with frequent downward stop in, and that way you have to identify, so that shift in trading zone you can identify that. Now they are doing the middle level consolidation in the market. Euro and GBP, they are all in the middle level. You know, the extreme lows, wow, they have shown it. And in the middle level consolidation, they will make either way stop ins. So after that, they have finished it. Afterwards, they are expected to make an extended downward stop and start gaining the level. They have finished in the case of GBP as well as USD-yen. So they are likely to gain the levels from these levels slowly, and for weekend by tomorrow and day after tomorrow, they are expected to make more aggressive gains in these two currencies. And at the same time, you'll find the denominator currencies also gain alternatively. So they start with that of a stop and during the day, during the early Japanese session, followed by that of the swing during that of the European session, swing during that of the mid session. Then they make the, take up the timing. So Japanese session, they make a brief upward or a downward stop and then they make the swing during that of the mid session and make the opposite move. Either if it is swing and rise mean, they will make swing at the lower level and rise at the towards the close. They are making, if they are expected to make swing and slide, then they make the high level swing and then start making the slide during that of the late session. Then the gap time, they make the false move. So if they wanted to gain the levels, they will pretend as if it is going to drop during that of the gap time. Then subsequently, during that of the early session, they will make the swing near that of the low. And if they are expected to gain the level, then they will slowly gain. And during the late session, they will quickly gain the level. Now in the US session, for example, they have made the swing near that of the high, and it has become a breakout. They breached all the highs, breached the initial high and stayed above there. So after that, staying above, mid-session they will make the swing and continue to gain the level during the late session. So this is how they make the moves in the market. And people might be wondering, why during that of the European session, most of the days, Euro and GBP slide, and during that of the US session, US dollar weakens? Because they create the market sentiment and then act against the traders. When the traders expect during the US session the US dollar to gain, then they gain more and more in the case of Euro and GBP. And during the European session, when the traders think that Euro and GBP are going to gain, many of the days you will come across that they make the slide and induce the long holders, because the normal behavior among the traders is that During the European session, they take the buy position in the case of Euro and GBP. During the US session, they try to take the sell and buy trade. Then the players act exactly opposite to them. This is what happens in the market during different times of the day. If there are any question, you can ask me. I will answer to those questions. Then you do the market reading by identifying the type of moves they are doing it, namely stop and false move, extended move, and the intentional move. They alternate the extended move with that of the intentional move. So if the intentional move is on the upside, now the current month trend, then they make a downward extended move for 2 hours and then continue to gain the level, then for 2 sessions and make an extended move. In between, during the early session, they make the stop and late session, sometimes they make the stop and gap time, they make the false move, and swings during that of the mid session. This is how the continuity of the moves are seen during the day. So in a trading decision, after identifying the type of moves, one can decide upon the entry, and during that of the early session, 30 minutes from start of the session, and after seeing whether it is intentional move or the extended move, and take near that of the low the buy, and take sell near that of the high. Take buy near that of the low and sell near that of the high. But if it is a breakout trade, then you buy above that of the high and keep for the higher level. And simply when they breach the resistance and stay above, if you think it is a breakout, like a stop and they will reverse it. But if you combine the timing, namely breach the initial high and stay above there for more than 30 minutes, then you find keep 5 or 10 pips below that of the market, the buy limit order, you will find that they will gain the levels definitely, and you will not be hedged. And still, in order to limit the risk, we can keep the hedge order 30 pips below that of the entry. And the exit, always keep 30 pips away from that of the entry, and hedge order 30 pips away from that of the entry on the other side, so that once a position makes profit, we can keep stop at entry and remove the hedge order. If it is hedged, watch for 10 to 30 minutes. The hedging is not making profit, close it and keep 30 pips away another hedge order and trail it closer to that of the entry level. And if the hedging is making profit, that means market is again going against our expectations. In such a scenario, if the move is very fast and if the net change is more than 75 pips, then you can understand that they will gain up to that of 150 pips. In that case, what you have to do, simply close the sell position and the buy will be making profit more than that of the loss what you have made with the sell position, and that way you will be able to get the net profit by quickly understanding the type of move they are doing it in the market. If the hedging is making profit for 30 minutes and you feel that tomorrow they are going to drop, and the forecast also says that tomorrow they will make a dip before making for the rise, then you can wait for the rise to happen, book profit in the hedge, wait for the drop to happen, book profit in the sell side, and take another buy and wait for subsequent rise when the trend is upward. So this way you can go with it of the market trend, and simply telling that a small move on the downside, a small move on the upside is a trend. You have to always identify what is going to be the overall trend in the market for the week. And that is what I explained it in my forecast sheet. So during this week, the monthly trending time, swing and rise moves may be seen in the market. So in line with that of that particular directional move, if you try to take the positions, then you will be able to really see profit coming in that. And small dips or buy opportunities. So if you want to take a buy and identify when I can buy, either in the morning, during that of the Japanese session, or during that of the late European session, during the dip, I can take a buy. This way you can take decisions on following the forecast, and also keep in mind that market reading is a must, identifying the type of moves. And once you identify the type of moves, you will be able to really, by noting down every day the initial lows and the highs, you'll be able to really understand on Monday where they were, and Wednesday where they are, and Friday how they are going to be. On a daily basis, you can note down the initial lows and the highs. Then overall trend will be shown here. It is not necessary that you have to see the chart for 200 days moving average or 100 days or 50 days, because ultimately nobody is going to hold the positions for such a long period. Even though theoretically it might be all right, but practically the traders who take the positions will try to close the position as quickly as possible. So within the week they will try to close it, and also players close the positions within the week, and then you can understand how they are going to make the moves in the market. And you know the normal trend is, whether you come across the higher lows and the higher highs, the trend is upward, and that is fine. So you can identify it with the help of the initial lows and the highs, that, and so that you'll be able to really understand the trend reversal where they are going to make it. So the intraday trend reversals can be seen with the help of the forecast. So here you find that they are expected to make an upward move and make a higher level swing and then slide and then rise again. So intraday trend reversals you can identify, so that you can avoid getting vulnerably trapped in the market. Because when you go in for a breakout trade, when they are making an upward stop, and you need not take the buy position. If they hold above that of the initial high for more than 30 minutes from the start of the session, only then you go in for a breakout trade, you will see the real profit in the trade. Simply think that, okay, it has breached the resistance and gone, then it might be a stop out. Keep that in mind. If there are any questions, I can answer to those questions. Now, USDN is making a nominal profit, and GBP is almost flat. Still, euro is not being filled. They have come down slowly. Probably I'll modify it to 1.1395. Then they could make a dip, because it appears that they are strongly holding and not willing to drop it. Probably a brief downward stop you can modify and take a buy, and definitely they will make further rise in the market towards close during the late session. If you got any question, kindly ask me. I'll answer those questions. Because the webinar has to be interactive, only then you will be able to really understand based on the questions. Otherwise, it will appear it is easy to follow, but later on you may struggle once you are hedged. Because invariably, when you try this in a demo trading platform, you will think it is working very well. But when you try in a real account, then you become more frightened. Once it is hedged, you become really upset, and you do not know how, you do not want to book loss in the hedged position, even though it is hedged and subsequently not showing any profit. Then you expect the market to move that way so that you can close it. But you have to use the appropriate trading strategy to accept what type of move they are doing it. Accordingly, you have to close the positions. So if it is hedged, don't hold it for more than 30 minutes unless and otherwise it makes profit. Any question? So now you can understand slowly they are gaining the levels in the case of USDN as well as GBP. When you look into that of the live market code page, we are able to understand that the initial low in the case of yen was 106.72. Then they came down only 9 pips, and that too exactly less than 30 minutes, and started gaining above that and holding there, slowly consolidating here to make further rise. So this is how you have to study it rather than looking at that of the candle formation. If you watch for the 30 minutes chart, the candle formation will not show you anything because it will be a one single red candle and then subsequently the market is showing green candle. So we have to look into that of the live code page so that, and also note down the timings from that with the help of the with the help of any platform offering the GMT time frame, so that we'll be able to really understand how the market is being operated on the upside or on the downside to trap traders. Okay, there is a question. Well, the Euro GBP is going to up from here. Okay, when you look into that of the net changes, Euro is making 48 pips, 46 pips positive net change, whereas GBP is showing 17 pips positive net change. So Euro is showing more, and both are in the green. So they are doing unidirectional USD weakening move, but Euro is gaining more when compared to GBP. So obviously they are expected to gain more levels in the case of Euro GBP. That's what during the mid session they will gain levels in the case of Euro GBP. Already it is 23 pips positive energy. Slowly they will gain the levels and breach the high and stay above. Any other question? Now these are all my contact details. My website address is iknowindices.com, i-knowindices.com. So here I just got the GMT time frame. This is how the website will be. Okay. So here you come across the GMT time and your local time, so that you can easily identify how to use the GMT time and locally understand what time frame. Otherwise, people used to ask what is the current GMT time and things like that. So try to find the method of getting the GMT time frame. Okay. Then my email ID is given here, dr@i-knowindices.com. If you got any doubt, you want to ask me personally and things like that, you can ask me, say by sending an email or a Skype chat. You can just add me in your Skype, I know indices without hyphen, @ of hotmail.com. It is a Microsoft account. And then once it is accepted, you can send your questions. I will answer your questions. Otherwise, you can use Yahoo Chat. I'll be available from 3:30 GMT up to that of 17:30 GMT on a daily basis. And you can just ask the question. I'll be willing to answer to you. In case if you want to call, the phone numbers are here. But if the phone is not picked up, don't become upset, because see, I'll be handling chats, I'll be handling the different phones, etc. Because all wanted to talk to me only, not to others. So you have to understand. And still, if you send the messages, then definitely I'll be able to reply to your messages. And I'll be giving the review of the forecast, what I have given it on Monday, and that will be the Asian session live market analysis webinar. And Friday, day after tomorrow, I'll be giving it between 5 and 5:30 GMT. And that is, I give the forecast on Monday during the Japanese session, and review it on Friday to show you the accuracy of the forecast, where it is showing where it is giving the real value for the traders. I don't find any question coming up. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and for your people for your kind presence and understanding of the market, and understanding my trading system. And if you've got any doubt, you can always contact me during any of the webinar time or send the email or chat. I'll be willing to help you. And without expecting any reward, it's not a trap of getting the clients, etc. Because I have seen enough of money using my forecast and the algorithm, and I want to extend the service to that of the traders who have lost money in the market, and I want them to earn back the lost money by fully understanding the market is being manipulated, so that you'll be able to understand the weakness of the players and try to trade rather than trying to trade against them, following the sentiment of what they are creating in the market from time to time. Wish you all happy trading. See you on Friday.